All right, the market's set to open in just a few hours, and the futures are indicating another somewhat healthy drop for the Dow. After another roller coaster week on Wall Street, should investors be worried? That's the topic this morning. Financial analyst Dan Geltrude says it's not time to panic just yet. You're here to explain why. Let's first take a look at some of these, at the markets over the last maybe 10 years or so. Back in 2008, the Dow closed, ended up in 2008 around 8,000. At some points, it was in the 7,000 territory. And by 2017, we're at around 25,000, 26,000. So you have to look at holding stocks as a long-term investment. What a tremendously good investment it has been, especially over the last few years, right?
It really has. You know, we can't get caught up in the emotion of the day-to-day of what's going on in the stock market. If you're going to be in the stock market, if you're going to be in the game, it's the long game. You have to sit back, you have to have a strategy, and you have to stick with it. You know, too much emotion going on in the stock. I'm not concerned about what's going on right now. I think there's some tremendous opportunity if you look at what's happening right now. You know, October is a bumpy month, that we already know, and I think that we're going to finish out that way. But still, I'm very much bullish on the market.
You would be buying into the market at this rate right now. You don't. I mean, you don't think that this could correct down several thousand more points?
No, I don't think that the correction will be quite at that level. Look, there could be more corrections, but as of yesterday, you had 40% of the S&P 500 companies reporting. In that, you had 82% of them had beat earnings estimates. Right. 60% had beaten revenue estimates. So what's really changed, other than the market is just moving at it as it does? But, you know, when you look at the substance of what's happening, there's nothing significant that's changing.
Yeah.
These companies are strong.
The economy is extraordinarily healthy. Let's talk about reasons for why we're seeing this slide right now. There's a lot of finger pointing. The president says it's interest rates going up. A lot of other people say it's the China problem and this little trade war we got going on here. Is the Fed right to raise interest rates at this point? Because it does seem like the market there was almost getting overheated for a while. Are they right to kind of tamp down and kind of bring us back to reality by pushing these rates up?
Of course, President Trump doesn't like it. Right. No president likes when you start to push up those interest rates because you're going to slow down the economy. But look, before President Trump came into office, what he had been complaining about was interest rates were artificially low. And I think they were for a period of time. It was crazy how low.
I think.
Yes, they were.
My mortgage rate's 3.875, and you could have gotten that for, I think, 5 or 6 years. It was incredible.
Well, I think what the Fed is going to have to do, depending on what the trend of the market it's going to be, if for some reason, let's say I'm wrong and we're really headed into a slide for a longer period of time, I think the Fed is going to take their foot off the pedal a little bit on these interest rates because they're projecting out into 2020 to be consistently raising interest rates all the way through. I think they'll back off on that.
Okay, we'll see how that goes. The next thing we want to talk about is the president hinting at another tax cut coming up. Let's listen to the president here real quick.
It's going to be a tax reduction of 10% for the middle class. Business will not enter into it. And this will be on top of the tax reduction that the middle class has already gotten.
So not much chance this gets done before the midterms. But you say this is a reason to vote Republican.
Well, being nonpartisan for the moment, look, let's go back to the market and how this plays out for a second. If the market is actually a predictor of what's going to happen and what we see right now, the market may be predicting that the Democrats are going to take the House. Because if in the midterm elections we see the Congress go into Democratic hands, you are not going to see tax cuts 2.0. Right. And as we've seen, these tax cuts are really fueling the economy. The one thing I don't like about what's happening with the tax cut, I love tax cuts, but one thing I don't like about it is that we are increasing the national debt, and that's dangerous territory. So because of the Senate rules, Rob, you're not going to be able to get these tax cuts through unless you're going to focus in on some cutting. Now, if they're willing to do that, that would be a great thing.
That's what they got to do. Yeah, I mean, $20 trillion at this point, it's too high. Dan, thank you so much. We appreciate your time this morning. All right, 55 minutes after the hour.